Hello, my name is John Grimes, and I serve as Ohio State University Extension's Beef Coordinator. Today in this video, we will be discussing the economic outlook for the beef industry in 2017. Ask anyone involved in the beef industry ranging from the cow-calf, backgrounding, feedlot, and packing segments about the events of this current decade, and you will likely hear terms and phrases such as drought, the economy, low cow herd numbers, trade, record high prices, feedlot and packer contraction, herd expansion, competing proteins, and consumer demand, to name a few. All of these factors and more are contributing to the beef industry's economic outlook for 2017 and beyond. As of January 1, 2016, the National Agricultural Statistics Service reported that there were just over 30 million beef cows in the United States. This number is up 3.5% from the previous year. The 2017 inventory is expected to be over 31 million beef cows, an increase of roughly 850,000 beef cows. Ohio currently ranks as the 29th largest state in terms of beef cow numbers at 284,000 head. This slide graphically demonstrates the significant fluctuations in the size of the nation's beef cow herd over the past decade. The economic downturn in 2008 started a herd reduction that reached lows in 2014 not seen in over 60 years. Record high prices and favorable forage conditions encouraged producers to expand the nation's cow herd by approximately 2 million beef cows in 2015 and 2016. The 2012 Census of Agriculture reported that just under 17,000 Ohio operations had beef cows with an average herd size of roughly 16.5 cows. 12,781 operations, or just over 75%, had less than 20 beef cows. Research studies from across the country indicate that the typical culling rate of the nation's beef cow herd falls somewhere between 15 and 20%. What are some of the economic and production factors that have contributed to the beef industry's current financial standing? Let's consider the following events. A bull market for commodities started in 2009 during the end of the global financial crisis. Grain prices soon reached record highs, signaling farmers to grow more corn, soybeans, and wheat. The livestock industry followed that pattern after down production years caused by drought and disease outbreaks in the United States. All commodity prices have dropped in the past few years after reaching record high levels, ringing in a current bear market trend. From August 2012 through 2016, corn markets dropped 60%. Soybeans saw a drop of 47% from August 2012 to February of 2016. The livestock industry has experienced similar declines in commodity cash prices that crop commodities have experienced. Unfortunately for the beef industry, they experienced their price declines more recently than the other agricultural commodities. Note that nearly all of these commodities have declined in price by 40 to 60% from their most recent highs. Drought has certainly had a significant impact on the size of the nation's beef cow herd throughout this past decade. This picture is the U.S. Drought Monitor map at the end of 2016. Note that large areas of several states in the southeastern states and California are experiencing severe to exceptional drought. In the first half of this decade, large areas of drought occurred from the Corn Belt to the Great Plains, as well as the Southwest and Far West. This graph represents the percentage of beef cows in states with respective pasture ratings. This demonstrates there has been a definite improvement in the percentage of cows experiencing improved pasture conditions. Comparing the same point in time from 2015 to 2016, there was a 13.1% increase in the number of cows grazing pastures rated good to excellent. Also, there was a 17.5% reduction in the number of cows grazing pastures rated poor to very poor. Let's take a look at the current supply and demand situation. On January 1, 2014, the U.S. inventory report showed 29 million beef cows, the lowest number since 1951. This number of cows contributed to a shrinking supply of feeder cattle and the subsequent record prices posted in the fall of 2014. The basic formula that profits plus grass equals expansion was put into effect. This resulted in 1.25 million beef cows being added to the U.S. herd in 2014 and 2015. The 2017 beef cow inventory forecast is around 850,000 head higher, totaling over 31 million beef cows. This expansion has led to increased beef production, up 5.8% more in 2016, and another 4.4% increase is projected next year. Per capita supplies of total red meat and poultry will be 7% higher in 2016 and increase another 8% in 2017. The USDA projects the livestock industry to provide 218 pounds of red meat and poultry on a per capita basis by 2018, a projected increase of 16 pounds per person from 2014. U.S. steer and heifer slaughter numbers were in steady decline from 2010 through 2015. Slaughter numbers are forecast to increase 1.3 million head in 2016 for an increase of 5.7%. Slaughter numbers are projected to increase a total of 1.6 million head in 2017 and 2018. The previous slaughter numbers are reflected in commercial beef production. Beef production declined steadily from 2010 through 2015. The expected increase in slaughter numbers are projected to yield an increase in commercial beef production of 3 billion pounds from 2016 through 2018. All U.S. meat and poultry production is projected to climb steadily over the next several years. After a dip in production in 2014, the three major protein sources of beef, pork, and poultry are ramping up production significantly and are projected to combine to increase total production by over 2 billion pounds annually through 2018. Per capita net meat and poultry consumption is certainly reflective of the economic turbulence that consumers have experienced over the past decade. A general decline in meat and poultry consumption started during the economic downturn that began in 2008. Consumption continued to decline and bottomed out during the peak of high retail beef prices in 2014. Per capita consumption is projected to return to similar levels seen prior to 2008. All segments of the beef cattle industry have been subjected to a price roller coaster over the past several years. Cattle markets were some of the last commodities to top the market and have been the last to spiral downward. Steer calves weighing 550 pounds have averaged $911 in losses from the cycle high, with 750-pound feeder steers falling $941 per head. Fed cattle prices have also dropped 43% since November of 2014. This slide demonstrates the dollar per head change from cycle highs to 2016 lows for various categories of cattle and beef. These figures represent the significant loss of income the beef industry has experienced over the past 2 years. Note that beef retail prices have not declined to the extent that other categories of cattle and beef have. Total cattle slaughter increased 1.65 million head, and beef production was up about 1.4 billion pounds, or 27 million more pounds each week in 2016 compared to 2015. This chart demonstrates fed cattle price as a percentage of retail beef price. Retail margins have been fantastic in 2016, and as a result, featuring activity at retail outlets has reached the highest levels in 5 to 7 years. Featuring is expected to be even more active in 2017. Retail prices are expected to decline about 10% in the year ahead. This slide represents the wide range of prices seen under the USDA's composite cutout values since 2000. The record high cutout values achieved in 2014 and 2015 are currently trending downward to a projected cutout value of $203 per hundredweight in 2016 and $185 per hundredweight in 2017. Consumers continue to send a message to the beef industry that there is a demand for branded choice and higher quality grade products. Select quality grade and ungraded beef will receive significant discounts to choice and higher quality graded beef as beef supplies increase. There is no doubt that beef imports and exports significantly impact prices that U.S. producers receive for cattle and beef. Note the significant drop in export levels in 2004 due to the diagnosis of a single BSE case in late 2003. It took the better part of a decade for exports to recover to previous levels. Import and export tonnage is impacted by many factors, including the U.S. and global economies, domestic and foreign beef prices, currency values, and trade policies, to name a few. This chart shows the important countries involved in the global meat export business. The United States and Brazil are the dominant forces in total meat exports. The United States continues to face stiff competition from India, Brazil, Australia, New Zealand, and Canada in the beef export market. It is important that the U.S. works hard to increase exports to help reduce the large supply of beef being produced. So what is the outlook for feeder calf prices as we move forward? While all cow-calf producers certainly enjoyed the historic feeder calf prices of 2014 and 2015, these prices simply weren't sustainable for the entire industry. As the cow herd expands and feeder calf supplies increase, prices for feeder calves will decline in the near future. Cattle Facts projects that 550-pound steer calves will average $160 per hundredweight in 2016 and drop to about $150 per hundredweight in 2017. Prices received for 750-pound steer calves follows a similar pattern of highs and lows compared to their lighter weight counterparts. Similarly, large numbers of feeder calves available to buyers will lower prices in the future. Cattle Facts projects that 750-pound steer calves will average just over $140 per hundredweight in 2016 and drop to $130 per hundredweight in 2017. A variety of factors can impact the value of a bred cow. The greatest impact on the value of a bred cow is the current price of feeder calves. The table shown here indicates the effect of a range of feeder calf prices on potential prices for bred cows. Note that a drop in the price of a 550-pound feeder calf of $20 per hundredweight can potentially reduce the price of a bred cow by $165 to $180. As you might expect, the annual average bred cow price closely follows historic feeder calf prices. Cattle Facts expects bred cows to average near $1,500 in 2016 and decline to $1,300 in 2017. This graph documents average cow-calf profit and loss levels based on cash costs only back to 1980. The green lines indicates profitability for high-return producers over this time frame, and the red line represents the low-return producer. The table at the bottom of this page lists the cash cow costs and total cow costs for high, average, and low return producers. As we enter a period of lower prices for feeder calves, producers must be diligent in keeping production costs in check. The packing industry has faced challenges over the years in order to achieve consistent profitability. Over the past decade, the packing industry has attempted to address excess capacity by closing several major packing houses. As a result, packer profitability is projected to be strong in 2016. From record profits for producers in 2013 and 2014 to record losses in 2015 and 2016. The equity drain is now pretty much behind the cattle margin operators. The packing industry experienced record profits in 2016 and will have very good margins in the next few years. Cow-calf producers will have to focus on production efficiency and overall productivity as margins narrow. About half of all cow-calf producers have returns that are back near break-even levels. Price trends remain down as production levels build. The majority of the price adjustment has now taken place or has been priced into the futures market. However, export growth or the lack thereof will play a major role in where prices ultimately will go. Cattle Facts has projected the 2017 price outlook as follows. Fed cattle at $110 per hundredweight, 750-pound feeder steers at $130 per hundredweight, 550-pound steer calves at $150 per hundredweight, beef cutout values at $185 per hundredweight, bred cows at $1,300 per head, corn $3.45 per bushel, crude oil $48 a barrel, retail gasoline at $2.49 a gallon, and retail diesel at $2.60 per gallon. Despite the current downturn in cattle and beef prices, there are opportunities available to producers. Retained ownership may be attractive for cow-calf producers depending on calf weaning weights and management flexibility. Backgrounding can be an option if you have available forage to allow you to achieve favorable cost of gains. Current retained ownership in the feedlot continues to look positive based on the feeder cattle market and expected break-evens based on the cattle cost and feed cost. To summarize the beef industry outlook for 2017, most agriculture market prices have declined 45 to 60% from the highs earlier in this decade. Ag land values may have significant risk lower in the next 2 to 3 years if commodity prices don't rebound. The U.S. beef herd expansion has slowed due to the rapid reduction in prices. Most of the inventory growth will be seen in the 2017 inventory report. The U.S. will continue to increase beef, pork, and poultry production. Future growth in export markets will be necessary to keep supply and demand in balance. The global economy that has crippled export markets the last 2 years is beginning to look a little more positive. U.S. prices are now much more competitive in the global market as lower prices will gradually buy back demand lost at record high prices. Grain prices are expected to be near break-even production costs for the next several years. Commodity cycles are an economic reality and can quickly change under specific circumstances. The entire agricultural sector has been subjected to significant economic volatility throughout the current decade. The beef industry has not been immune to these challenges. After experiencing historically high prices for nearly all classes of cattle and beef, the immediate economic outlook for the beef industry will require all producers to sharpen their management skills. The producer that can find the optimum balance between overall production, managing costs, and producing a product that the consumer desires should achieve long-term success in the cattle business. If you have any questions about this presentation or any other topics, feel free to contact me. I am based out of the OSU South Centers at Piketon, and I can be reached on my office phone at 740-289-2071, extension 242, my cell phone at 937-763-6000, or by email at grimes.1@osu.edu. I would also encourage you to visit the OSU Extension Beef Team's website at u.osu.edu/beefteam/ to find the most relevant beef cattle information available to Ohio cattlemen.